Dan, the Messi of AI. I mean, that's a tall order right there.
I think that's really what CARP's built. And in my opinion, it's still undiscovered as just a broader AI play, which is why I believe they're the Messi of AI. I think there's a golden path right now for them to monetize what we view as potentially $1 trillion market opportunity. And I think investors still have not recognized what this golden goose could be.
Hey, this is Tom, and this is a good time to be a Palantir investor. On the one hand, this stock just flew up by 10% just today. On the other hand, Dan Ives, one of the most respected analysts in the market, and the guy who's been one of the main Tesla bulls for the past 5 years, just called Palantir the Messi, Lionel Messi that is, of AI.
When you think about some of these newer AI applications in real time, they're already being applied on the battlefield. Case in point, Ukraine. Palantir is a key example of that. Do you think this is a situation where investors don't fully understand what this company does because so much of it is defense tech? And yes, I realize it's expanding out to the commercial side too, but there's a lot that they can't talk about, for example.
Well, I think that's the biggest misperception. I can tell you, we're talking to many in the 202 area code. The reputation of Palantir speaks for itself in terms of any sort of operations, three-letter agencies. Now, if you're an enterprise CIO, and this is the conversations I've had, you're looking toward AI platform approach, Palantir is potentially the first call.
So just the commercial business of Palantir is driving almost $240 million per quarter in revenues. The US clients are growing by 50% per year. US revenue is growing by 26% per year. And the net dollar retention, even though it's been declining a little bit lately, is at 111%. Now, this number right here is where I think it's most interesting. $50 million per client for the top 20 clients of Palantir. So imagine what I'm talking about here.
And that's why I think in this AI gold rush, what I view as the fourth industrial revolution, of course it's NVIDIA, Microsoft top of the mountain with Nadella. You look at second, third, fourth derivatives, right now Palantir front and center. And that's why I think this is a stock. You look at our bull case model, I think this is ultimately $25, and I think as they execute, more investors start to look at it.
The top 20 clients of Palantir are paying $50 million each on average to this company to do whatever it does. So let me ask you a question. If you are a Fortune 500 company, who would you pay $50 million a year? It has to be somebody who drives results, and results they drive indeed.
The other thing, Dan, I was kind of curious for your take on this because there is a meme stockiness to Palantir too. I'm wondering how much of that factors into your calculation there,
yeah,
too.
No doubt. I mean, there's a huge retail presence.
Right.
And but also I think this is one where maybe retail has been ahead of institutional in terms of understanding the actual potential AI story. I can tell you in my conversations today, it's really institutional investors being like, okay, what am I missing in this story? Where is the actual total addressable market opportunity? And can they go from government to commercial?
So in 2015, Palantir started working with Airbus on their flagship plane, the A350. They've made it faster, safer, better, cheaper, but mainly they've cut the production time of this plane by 33%. Now, cutting this production time by 33% is kind of a big deal. Let me show you why. Because we're talking about a lot of moving parts. These are the moving parts we're talking about, ladies and gentlemen. 5 million parts, literally, in this plane. It's manufactured over 4 countries, hundreds of teams, 8 different factories. Palantir came in, made this whole thing into one holistic view, and with its AI system, they've managed to cut the production time of this plane by 33%. They looked at their production lines, at the schedules, at the parts, at the deliveries, defects, human resources, work orders, quality, everything went into one big pile. Data goes into the pile. AI finds the answers, allows you to cut production time by 33% on this massive plane. Data piled up into one big pile. AI drives better decisions. That's literally the business model of Palantir. That's all it is. The simplicity of it is actually quite insane. Take all the data you can find. It's all siloed completely separately. Put it all together. Get an AI to help you make better decisions with the massive amounts of data that you have, but you don't know how to apply to get things faster, cheaper, better. Well, then what you get? 33% decline in the production time of the A350.
Because I think when you start to look at that, for them is really the opportunity. And if you're a CIO of an enterprise, there's no better reference accounts than those in the 202 area code.
But what does that look like? I mean, if you think about it, okay, so it's very opaque what they're doing on the military side of it. I'm just curious, what does that look like on the commercial side? Like, what are you seeing there? And especially, I know they're growing some clients and so forth. What are you seeing there?
I'd say from a platform approach, in terms of scale, and in terms of actual use cases, they're probably the first call. I think they're probably in this market the purest AI play out there. Now, they built it, others are coming, but it just speaks to our view. In this fourth industrial revolution, Palantir is going to be a big player.
The first time I ever heard a major company say machine learning came from Palantir.
Yeah.
This is a company that gives me $350 million in free cash flow. They have $3 billion of cash with only $250 million of debt. 10 times more cash than debt. They have assets of $3.7 billion. $3.7 billion of assets. Liabilities of $880 million. 4 times more assets than liabilities. 10 times more cash than debt. Gross margin of 80%. Growth currently at 20% year over year in a bad year. I don't think Palantir keeps growing at 20% for long. I think their growth is going to be exponential. But even now, in this horrible year, high interest rates, the Fed, all that good stuff, 20% growth. I don't think there's anybody who looks at this objectively without the hate and the preconceived notions about this company who says this is a bad setup. If I showed you these financials without Palantir in the headline, you wouldn't say this is a bad company. Now, there's another thing that people like to bash Palantir for, which is the stock-based compensation. Now, there's a few things I want you to understand here. Number one, Palantir started off with massive stock-based compensation because it went a very unusual path. It went to the market not as an initial public offering, not as an IPO. It didn't go to the market as a SPAC, God forbid, of course, because it's not a trash company. It did something very unique. Palantir does things different. Instead of being in the Silicon Valley, they're up in Denver, in Colorado, I don't know where they are, right? Instead of going an IPO route, they did a DPO. A DPO is a direct public offering. Can't recall a lot of these. Basically, what it does, it cuts out the middleman. Instead of the banks giving the stock to their friends and VIPs, and then you only getting it as an IPO later, much overpriced, Palantir decided to cut out the middleman, cut out the banks. And the way they did it is very simple. Have the employees and the current shareholders create the market for the stock. So to do that, they had to do a massive dilution in order for these guys to be able to create the market for the retail investors and the institutional investors. But all of this dilution happened before Palantir went public. So this dilution that everybody keeps showing, that's massive dilution. It all happened before the DPO. Well, mainly before the DPO, in order to allow for the DPO to even happen. Since the DPO, since the direct public offering, Palantir has been consistently coming down on SBC. In fact, if you look at stock-based compensation, options, RSUs, whatnot, as a percentage of revenue of Palantir, just 3 years ago, it was 75% of the revenues of Palantir. Right now, it's at 22%. Now, some of you may ask, well, Tom, isn't 22% kind of high? Well, look, let's look at a comparable. Who knows, right? Snowflake, which is a great comparable for Palantir, is at 18%. So if Snowflake has 18% of its revenues go back as a stock-based compensation, and Palantir is at 22%, I'm going to say, it's not too far. It seems on par with Snowflake. And Snowflake is a Warren Buffett investment. So if Snowflake is good for 18%, I apologize, then Palantir is good for 22%. It's in the same realm. It's within the realm of reason. So I don't see any issue with that. I think it's absolutely normal. Now, going a little bit deeper here, look, the company's already GAAP profitable for 2 quarters in a row, and it's supposed to be another 2 quarters profitable until the end of the year. The customer count of Palantir went up 41% year over year in the last quarter. The price to sales of Palantir is 19. It's not cheap. It's not a cheap company. This isn't a value play. Let's put it this way. It's a growth stock. 19 price to sales is not cheap. It's very expensive. But again, how expensive? Well, again, let's look at Snowflake. Snowflake is currently trading at 25. So if we compare Palantir to Snowflake, which is a reasonable comparison as far as, the amount of revenues, the style of the market they're in, although they have absolutely different products that has nothing to do with each other, right? Snowflake is trading at 25 price to sales, and Warren Buffett is investing in it. Palantir is at 19. It's cheaper. Stock-based compensation is a percentage of revenue. Well, Snowflake is at 18%. Palantir is at 22%. They're in the same neighborhood. So I would say this isn't unusual for a high potential, high growth company. And now we're getting to the interesting part. This is my bear case for Palantir, where I think Palantir is going to be in 5 years on the bear case, assuming it doesn't get to exponential growth, assuming it stays with 20% growth. So if Palantir only grows 20% per year for the next 5 years, in 2028, we have $6.2 billion of revenues. If they get to 35% EBITDA, which for a software company is absolutely normal, then we're talking about $2.2 billion of EBITDA. At a 25 multiple, which is okay for a software company, for a high growth stock company, 54 billion is the valuation I'm getting for my bear case in 5 years. So at the very least, if Palantir maintains 20%, which I think it can do a lot more, but if Palantir gets stuck, it stagnates on 20% per year, it doesn't grow much, and it becomes an average SaaS business with 35% EBITDA margin, Palantir is worth 54 billion in 5 years, which gives it a 46% upside from today. So if my bear case, absolute bear case says that Palantir will give me 46% of return in the next 5 years, which is about 9% per year. If the S&P 500 is giving me 9% per year, and this company on the bear case gives me 9% per year, but this company has the potential, in my personal opinion, not financial advice, my personal opinion, it has the potential to go to $1 trillion valuation. But in the bear case, it's going to give me the same as the S&P 500. I'm going to play this card. Now, again, as a long-term investor, there's something you should know. Recently, the stock went up like crazy. Now, how crazy? I've made a little chart to show you how insane and how fast this happened. Now, this thing makes sense to me. It doesn't yet to you, but hold on a second. It will in a second, because this thing is super, super important. Now, this is what happened to the stock, give or take year to date. It started with a 52-week low, about $6. It drove up to $19 about a week ago, which is the 52-week high, and it's currently settled in at $17.8, which is today's end of trade day. Now, here's how I look at it as a long-term investor. In my opinion, the best way to invest in a stock like Palantir is to dollar cost average over time. That means I don't panic sell, I don't FOMO, I don't lump sum. Every single week, I take a certain amount of money, which I calculate for my budget, and I put it in the stock market. And I divide it in between the stocks I want to invest in. A Tesla, a Palantir, the S&P 500, all, by the way, things I have in my portfolio. And then I just put it in. And I make sure that I put 30% of the money on the side. So if my allocation says that I can spend $1,000 investing in the stock market every single week, okay, cool. So if $1,000 is what I have to put in the market every single week. So I'm going to take $700 and I'm going to put it to work. 30%, $300 is going to go to the side. Those $700, which I am putting into the market, they will go towards Palantir, towards Tesla, towards the S&P 500. In your case, it's different stocks, and that's okay. Everybody have their own stocks, right? That $300 stays to the side. Now, I'm dollar cost averaging, but then something happens. The minute the stock, whether it's Palantir or Tesla, drops below the threshold line, the 10% threshold line right here, the 10% threshold line, which is a line that signifies 10% below the 52-week high right here. So if this is the 52-week high, 10% below it is $17.10. $17.10 is going to be right here. So the minute the stock drops below $17.10, I'm in the green zone. In the green zone, I'm now dollar cost averaging at a double pace. And where's this double coming from? From that $300, from that 30% I've put to the side every time I've allocated money to the stock market. I'm now taking money out of that 30% pool that I have lying on the side, and now I'm doubling down. The whole time this thing is in the green zone, I'm dollar cost averaging every single week, but at the double pace. Instead of $100 each week, $200 each week. But the moment this stock goes into the red zone, it goes above $17.10, above the 10% threshold line, it goes to the red zone. I'm dollar cost averaging normally. I'm no longer doubling down. I'm dollar cost averaging normally, as long as it stays in the red zone. Right now, the stock, as you can see right here, is in the red zone. It's above $70.10. It's currently flying up. As long as this thing is in the red zone, I'm not doubling down on the stock. I'm normally DCAing. Buying more of the stock when it's dropping, that's the right way to do it. Buying a little bit less of the stock when it's flying up, that's also the right way to do it. The absolute wrong way to do it is to sell and ignore the stock when it's dropping and buy it like crazy because it just went up. Because you have this fear of missing out. Oh my God, I've missed the train. Oh no. Guys, if you are excited about Palantir, and you may or maybe not, this isn't financial advice. I'm not telling you to buy or sell Palantir. But if you are excited about Palantir, I'm going to tell you right now, you have 5 years to invest into the stock. This thing has time. If you dollar cost average over the next 5 years, slowly, using the green zone and the red zone, you'll be fine. There's no reason to rush into anything in the stock market, definitely not a growth stock like Palantir. Now, if you want to learn more about our system, this is literally what we teach on our Patreon community. 5,000 members and counting. Actually, 5,100 members and counting right now on our private community on Patreon. We teach these strategies, how to become long-term investors, how to become better long-term investors, how to do your own DCF models, how to do your own valuation models, how to learn discipline, system, process, cut out emotions, all this stuff. Join our Patreon. 30 days trial without any risk. If you try my Patreon for 30 days and you don't like it for any reason, you get a refund right away, within a second. Try it out. Join our Discord. We have dedicated rooms for Palantir and Tesla and a bunch of other stocks. But if you're watching this video, join our Palantir conversation. We have some of the brightest minds in the industry. We have people who are talking with Palantir, clients, customers, absolutely insane things. Join the Patreon. Would love to see you there. Thank you so much. Shout out to Dan Ives for his beautiful analysis of Palantir. Thank you all. And I guess I'll see you next week when I do my Dan Ives interview.